Welcome to the deep dive.
Great to be here.
So today we're tackling something a lot of us, well, put off, life insurance.
Procrastination central sometimes.
Right. We're looking at some info from Diversified Insurance Brokers, and it really suggests that waiting, that whole later idea, it might cost you a lot.
It really might. The core question we're digging into is, what are the actual concrete disadvantages of delaying that decision?
Okay, let's start with the big one, the cost. We kind of know things get more expensive as we get older, but these numbers are, well, they're pretty stark.
They really are. It's a basic principle, actually. The older you are, the higher the statistical risk. So the premiums go up. It's just how it works.
Makes sense.
Yeah. So Diversified Insurance Brokers gave this example for a $250,000 indexed universal life policy. That's a permanent type, builds cash value potentially.
Okay.
For a preferred risk male non-smoker. At age 45, the annual premium is roughly $2,143.
Right.
Wait until 55. It jumps to $3,420.
Oof. That's over $1,000 more a year.
Exactly. And then hold off until 65. You're looking at $5,828 annually.
Wow. That is a huge leap, especially between 55 and 65.
It is. So just delaying by a decade, you're not just paying that higher amount going forward.
You've missed out on 10 years at a lower rate, too.
Precisely. It adds up significantly over the lifetime of the policy. We're talking potentially thousands, even tens of thousands in extra premium costs.
Okay, now here's something I found really interesting. Lots of people figure, hey, I'll start with a cheaper term policy now, lock something in, and then convert it to permanent later. Seems logical on the surface.
It does seem logical, and it's a very common strategy. Term life is usually less expensive initially, so it feels like an easier entry point.
But the long-term picture might be different.
That's what the data suggests. Diversified Insurance Brokers had this scenario. A 45-year-old buys a 20-year term policy. Annual premium, maybe $415. Pretty low.
Yeah, that sounds affordable.
Right. But then, fast forward. At age 55, they decide to convert that term policy to a permanent one.
Okay, so what happens to the total cost then, compared to just getting the permanent policy back at 45?
Well, crunching the numbers for that specific scenario, the total premiums paid over that person's lifetime, using the term then convert approach, ended up around $140,950.
$140,950.
Okay. Now, if that same person had just bought the permanent policy from the get-go back at age 45.
With the $2,143 annual premium we mentioned.
Yes. The total lifetime premiums would have been about $107,150.
Whoa. So that's nearly $34,000 more expensive by starting with term and converting later.
Almost $34,000 difference, yeah.
Yeah.
It really highlights how that initial saving with term can actually lead to a much higher overall cost down the road.
That's a massive difference. So the takeaway is locking in that permanent rate earlier, even if the initial premium is higher than term, saves a lot long term.
Generally, yes. For long-term permanent coverage needs, starting earlier is usually the more cost-effective path. You secure that lower premium based on your younger age.
Beyond just the premium costs, the dollars and cents, are there other upsides to acting sooner rather than later?
Oh, definitely. I mean, the most immediate one is the death benefit protection itself.
Right. Your family is protected sooner.
Exactly. Financial security right away. And with permanent policies, like that universal life example, there's the potential for cash value accumulation. Starting earlier gives that cash value, much more time to potentially grow. Tax deferred in many cases, more runway for growth.
I guess there's also the health aspect, right? Waiting increases the chance something pops up health-wise.
That's a crucial point, actually. While our source didn't dive deep into specific health stats, it's common sense. As you age, the risk of developing health conditions increases.
Which could make insurance way more expensive, or maybe even make you uninsurable.
Potentially, yes. Waiting risks not just higher premiums due to age, but also higher premiums due to health changes, or even being denied coverage altogether.
Okay, so wrapping this up then. The key lessons seem to be, waiting almost certainly means paying higher premiums.
Definitely. Age is a primary factor.
And that common strategy, term first, then permanent later, it can work, but it might end up costing you like tens of thousands more over your lifetime.
It often does, yes. The math frequently favors starting permanent earlier, if that's the end goal.
Plus, acting sooner gets you that immediate protection and gives any potential cash value more time to grow.
Exactly right. Early action provides peace of mind and potential financial advantages. The insights from Diversified Insurance Brokers really drive home that procrastination here. It has a real price tag.
So, for you listening right now, maybe think about where you are in your own timeline. Is waiting for the right time actually becoming the most expensive time for you?
It's worth considering the long-term implications. Don't let later sneak up and cost you more than it